I've often said, at least a large part of my practice would go away if advisors and brokerage firms went on television and said, come on down to Bank of America's used securities lot and we'll sell you a lot of securities. I think it would put a different perspective on what customers think and expect and believe. So do realize that you are accountable for the way you hold yourself in. Next rule, across the board, don't ever get involved in something you don't understand. That has been a problem, I think, today, and I think a lot of people, both professional and investors, have been very much impacted by that. And some of modern tools are very difficult to understand. If you do, I applaud you for it, but somehow you've got to be able to reasonably convey what you're doing in those areas to a client. And oftentimes in the cases that I've handled, you start asking people, and it's something as simple, relatively simple as a variable annuity. Tell me what a variable annuity is. And you see a blank face. And I talk with people that do a lot of defense, and they said that's their biggest concern. Simple question. Tell me what this is. And it's amazing how many people can't answer that simple question. You've got to be careful, I think, about blind trust, no matter who you are. I think one of the things we've learned, and we'll see how it plays out, is that everybody, virtually everybody, whether it be customer, whether it be financial advisor, brokerage firm, municipalities, trusted ratings agencies. I think the simple way was, look, these guys rating this AAA or investment grade, and that, turned out to be certainly a problem. As you all may know, there is a ton of litigation going on right there on whether these people were compromised by other circumstances, influenced by other circumstances. But I do think that in those areas, a lot of people were sitting there thinking, that's my safety net. That's what's confirming to me this is the right thing. And frankly, when you take, and this did happen in some cases, the lowest pieces of a bunch of junk mortgages and pool them together and say 70 to 80% of that's AAA or the equivalent of government security. I'm sorry, it just doesn't sound right to me. If life were that simple, that's sort of modern day alchemy. Attention and monitoring. I think both customers and certainly advisors are well advised to keep an eye on their accounts. I think it's a two-way street, and I think that is a very important thing. Again, go in with communication and knowing your customer, knowing your advisor. Ask questions. When something happens, ask questions. Don't let, there's some slick people out there. There's some bad people out there. I don't think most people are bad, but there are some bad people. There are people that'll just, really say about anything. Got to always be aware of that. But ask questions. And a lot of people, investors, I think, are intimidated to ask questions because they feel stupid when they do. I've heard that a lot of times. And I think sometimes that's been fostered by the way they have been responded to. You just don't understand. I have a couple right now. It's a great story. I told Rich this because his daughter's working on it. Lady, over 40 years, saved $2 million, all sorts of ways. She was raised in a house that didn't have running water. Over 40 years, she made one investment, CDs, at a local bank. In early 2008, she gets concerned because she's reading that the local banks may have problems. She's got all of her CDs in this bank, and she only has $100,000 insurance. I can't stay there. So she decides to go to a big firm, name's irrelevant, who assures her, don't worry, we've got multiple banks and we can spread your money out so you'll have more protection. But we've also got the system. And my client still can't explain to me what the system was, just the system, and no one's ever lost money over 10 years. And boy, this is so complex and sophisticated. And now it's a 4-year program, but you're just going to make bundles of money. So she thinks that she's going to put part of her money that will be kept safe in CDs and the rest in the system. As it turns out, all of it's put in the system. And she loses $1,500,000 in about 7 or 8 months. And she says, I had a couple of meetings with them. One meeting after I'd lost $50,000. I don't understand this. I can't see where my CDs are. And at least her story. Don't worry, you don't understand this stuff. You're not trained in this stuff. And we've got all these, and stocks have gone out, but that's great for us because our system, this is a great buying opportunity, and this is just what we wanted to have happen. You just got to give this thing time. Okay. Finally, after about 7 months, she can't understand her statement, so she calls her son over, says, will you take a look at this? I need to know where my CDs are. And she gets the bad news that there aren't any CDs, and she's lost bukus of money. You talk about monthly statements and things like that. In this case, I've got emails to the broker saying, I don't understand your statements. Will you please give me a summary of what's happening? And she gets them very late in very confusing fashion. Interesting matter, but very true story. Obviously, cardinal rule, if it's too good to be true, it probably is. And when you hear something like that, and whether it's Madoff, I earn 12% no matter what. Rich and I were talking about some people offering, saying, well, I will generate a 40% return on an annual basis. Okay, 60% return. By God, you better start asking questions. You really do need to do that. Record keeping. I encourage, and I think this is true of investment advisors, of brokers, and there's a debate, and I'll explain it to you in a minute, and customers of what happens. I know, because I've spoken at to a number of legal departments on Wall Street, that there's a debate there. A lot of lawyers don't want records kept. And it's because, arguably, records can be misconstrued. Records aren't always complete. I'm sorry. They may be right, but it's my belief that if what the story is recorded, then it protects the broker or the financial advisor if they've done their job, and it protects the customer if there has been a failure to follow through on what the customer's needs were, what their risk tolerance were, or on what they were told that was incorrect.